Hello, hello, hello. Good evening, everyone. It's a late evening, but I still need to bring you the resource. So, my name is Tamara T. Bush, and I am an author, visionary consultant who provides resources that impacts finances. Wanted to hop on really quick and talk about the Ultra FICO credit score. Not sure if you know, but this is something that has been implemented in 2020. It's actually not new. It's been around probably for about a year or so. People started talking about Ultra FICO in late 2018, early 2019. It is a credit score that could be good news for consumers who don't quite have the credit scores that they need to qualify for credit products, right? The Ultra FICO score, they're saying that it's an opt-in credit model that uses information from your checking or savings account, and basically what it does is it supplements the information that's already on your credit report. The information being considered includes how much you have in your savings account and how long your accounts have been open and active, right? So it's typically meant to enhance your existing FICO score. Now, if you're already in an excellent shape as far as your credit and you don't need any additional points for approval or to qualify, then you may not need it, or you may need it. It just depends on your specific situation and what you're trying to accomplish. But those people who have credit scores anywhere in the 500s, the upper 500s, or the lower 600s, and that's considered bad to fair credit, this can be extremely helpful in boosting that score to qualify for credit products. Now, how does the Ultra FICO work? The information that's currently out there is telling you that it's an opt-in. They're saying that it's an opt-in, meaning that you have to go to a website. Experian, I believe, right now has an option where you can opt in to the Ultra FICO score. However, if you have been paying attention for the last 12 months, you will know that Ultra FICO is currently being used regardless if you opt in or not. And I will tell you why. There are certain companies out there that have sort of changed their credit model qualifying process. So if you're applying for loans or anything online, you may find that some companies are connected or have a form that is connecting them directly to your financial institution in which you have an existing checking or savings account. They're already doing this. This is already being done. This is not something that you're opting into. It is already being done. And most of you probably didn't know that it's being done. You're just saying, oh, well, why are they asking for my checking account information? Why are they asking for this information? People, it is not an opt-in. It is already being done. There are companies out here that are offering leases. They take the credit and they shape it and mold it into the form of a lease. That's the language that they're using. Oh, come here, purchase some furniture, purchase whatever it is that you need to purchase, but they're putting the terms into the form of a lease and they're running your checking account. So what's happening is you go to a store or you go to an online website to apply for credit to receive goods, a product or a tangible product. They have a form that pops up and says, hey, can you find your bank? Do you bank with Bank of America, Wells Fargo, credit union, whatever? It doesn't matter. Their systems are directly speaking to the online secure portal platforms of those financial institutions out there in which they have a relationship. So what happens is when you go to apply, a form pops up. You put in your username, you put in your password that you would usually use to log into your checking account. And it says connecting with server, or it'll give you some message that says that their system is basically talking to your financial institution's system. And what'll happen is that another screen will pop up where once the system has logged you into your account, it's going to say, hey, which account would you like for us to look at? So it's going to give you a listing of all of your accounts that you have with that particular financial institution. And once you click the account that you want to use, it's going to do all this work behind the scenes to say, okay, well, we've looked at your account. This is what we believe that you are approved for based on what we see. People, this is Ultra FICO. This is not an opt-in. It's already being done. Most of you did not go to Experian to opt into the service. But if you notice, when you go to apply for certain things, they are using your checking account. Now, here's the kicker. All right. Now, if you're using your checking account or your savings account to qualify for credit, it's going to hurt you if you're not maintaining a minimum balance in your account, right? Because they need to see consistency. They need to see stability in your account. Most people that are approved using Ultra FICO has a positive balance in a checking or a savings account on average of at least $400, right? If you have overdrafts, this is going to hurt you. People, monitor your accounts closely. Make sure that you are not getting frivolous overdrafts because you're not paying attention to what's coming out of your account. If you have to create some type of ledger where you write down all of your purchases or an online spreadsheet, something that's going to help you to monitor your checking account to make sure that you're not receiving overdrafts, right? If you have items coming out of your account that's on automatic draft, call those creditors and say, hey, can I push my due date? Whatever it is that you need to do to make sure that they do not draft your account and the money's not there. Next thing you know, you get an overdraft fee or you get an NSF fee. The Ultra FICO system will be able to see this. So in essence, it's going to hurt you. So you won't get the FICO boost that you're looking for by utilizing these systems. You got to make sure that you're not getting any overdrafts in your account. Now, you may say, oh, well, this has never happened to me. It's happening to some people, depending on the type of products that they're applying for. It is definitely happening, right? It's happening. Now, FICO scores have been rising in general. The average score released in April of 2019 was 704, up 3 points from the year before, according to the data from FICO. 22% of consumers have had scores between 600 and 699, prime candidates for credit approval if they could manage just a few more points, right? So now part of Ultra FICO as well, if you've noticed, Experian has an opt-in where you can, now they actually do have an opt-in, right? So that they can monitor your utilities. Light bill, gas bill. If you show a positive payment history for one of the utilities that you choose, it will help to boost your credit approval rating. So you have more loanability from creditors. That's going to help boost your credit score when you go to apply for things. So that's definitely an opt-in through Experian. But the Ultra FICO, it's not an opt-in. It's already happening. The approval process is different. The scoring model is different. All right. So the new scores, the new Ultra FICO scores is looking at deposit accounts, like I stated before, savings, checking. They're actually they're even monitoring the apps that you're using, right? PayPal, Venmo. So that could either help you or hurt you. Either way. The biggest pro is that you can get credit for banking that is done outside of traditional institutions. For example, Wayfair uses a platform called Zibby. Zibby is based, and a lot of people order from Wayfair, so you probably can speak to this. If you have ever ordered anything from Wayfair and you've gotten some type of pre-approval through Zibby, drop it in the comments section. Let us know what your experience was with that. But that is an ultra FICO model. It's not a traditional lending platform. They are looking solely at the activity that's going on in your checking account. So pay attention to that. And there are multiple retail outlets that are offering this type of pre-approval process and this type of financing. It's going to be based on the money that you have coming in. You know, when you think back to this, it's sort of kind of like Rent-A-Center, but it's a higher level of Rent-A-Center or a Best Buy. Same thing, different process, more electronic, right? They're using technology now. So now, one of the biggest drawbacks of the Ultra FICO is releasing yet more personal and trusting information to the public or to the cloud and not knowing if or if not it will be adequately protected, right? With all of the data breaches that have been happening over the past few years, this is just another thing that is further exposing you to risk. So be very careful what platform you choose to apply for lending from, and see if you can get some insight as to how they're using the information. There should be some sort of disclosure or something on their website or something in the agreement that is telling you how they are using your information, right? So these are some of the things that you definitely want to pay attention to. All right, so Ultra FICO, you may not be familiar with the term, but you are probably familiar with the process if you've applied for certain things over the past, let's say 12 to 18 months, right? Because it has definitely been being talked about. This is not new. It's been out here for quite some time. All right, so if you've had an experience with Ultra FICO, drop a note in the comments so that we can talk about it. We want to discuss this because a lot of people are still not aware of what's going on and how this could either help them or hurt them during the credit approval process. So again, this is Tamara T. Bush, author, visionary consultant who provides resources that impacts finances. We hope to see you soon on the next video. Have a great evening.